Next guest taking a closer look at the charts here. Joining me now, BTIG market technician Jonathan Krinsky. It's good to have you back, and a perfect reason to. What do you think here?
Hey, Scott. Yeah, so we were on a couple weeks ago talking about just when they launched the meme ETF, which had gone dormant since November of 2023, and how the prior launch of it back in November of 2021 kind of marked the peak of that. And, so far, if we look at the meme index, it's pretty much coincided. The peak has coincided with the launch of that ETF. I think the moral of the story here is that parabolic moves in any asset class tend to revert in equal and opposite fashion. And we've seen parabolic moves in the meme stocks and the quantum stocks, in precious metals, and we're seeing the opposite end of that over the last couple of days.
Well, I mean, you know how this works. Escalator up, elevator down. I mean, is that what we're at risk here?
Yeah, well, I think in some cases it took elevator up, elevator down, right?
Yeah.
So I think
rocket up, elevator down.
Yeah. So look, the parabolic moves are kind of certain parts of the market. I think the bigger focus for investors is, are we starting to see signs of weakness in other parts of the market, in the non-parabolic areas? And I think there's some modest weakness creeping through. And the backdrop for all of this is that we've now gone 121 straight trading days, about 6 months, without testing the 50-day moving average. We've only seen two longer streaks since 1990. Both ended around the 140, 150-day mark. So could we make it through the end of the year without a bigger hiccup? Surely it's possible, but I think odds and history would suggest we're likely to test that 50-day. And really, that's not the end of the world. But given the slow, steady uptrend we've seen since April, it would probably feel a little bit painful.
Does it even matter if these things pull back as long as other areas of the market don't? I mean, these are fun things to look at, these crazy moves in the charts, but they don't seem to be tremendously market moving.
No, I think that's fair, and that's why we're focused on some other parts of the market. And there is still rotation, to be clear. I think right now you're seeing some rotation into the more defensive parts of the market. The REITs and healthcare charts are starting to break out, both in absolute and relative terms. So I think that's notable. But yeah, ultimately it comes down. We're going to see a huge slate of earnings from the biggest names next week, in kind of the heart of the Mag 7, and that's really the make or break, probably part for the overall market.
Yeah, so from memes to metals, I mean, what do you make of gold in this breakdown? Yesterday was downright ugly. A little follow through today, but not nearly of that magnitude. But what do you think it's doing from here?
Yeah, I mean, so, at the peak on Monday, we were about 28 or 30% above the 200-day moving average. That's, that was the widest spread for gold in about 20 years, and about as wide as it's ever been. And so it's, we're seeing the pullback of that parabolic move. You could see a little bounce or chop. I think probably one more leg lower for gold, again, just to test that 50-day moving average. And then, look, the structural uptrend for metals is still intact. So I don't necessarily think this is the end of the structural bull, but I think it did need to shake out some excess, and that's certainly what's happening over the last couple of days.
Yeah, it's gotten a lot of attention. I mean, it's still, even with that dramatic pullback, it's still up more than 9% in a month. Jonathan, thanks. Appreciate it. Jonathan Krinsky.